After investing $10,000 in SCHD, you will not believe the amount of dividends it paid out. In this video, I share an experience on how I placed $10,000 into the Schwab United States Dividend Equity Fund and how that single action can translate into lifelong cash flow. Take a breath. Let the world's noise fade. Pick up a notebook or open a blank document. Each heading you hear is a stepping stone. Jot down the ideas that resonate so you can revisit them during your own planning session. Before we dive in, do me this one favor. If advertisements should interrupt this video, please do not click off of the advertisements. Please allow them to play through as a thank you to me for sharing with you this valuable information. Thank you very much for your kind support. Now let's continue. 1. Counting the cash. What $10,000 really pays. Numbers first, because numbers create confidence. As of late this year, the Schwab United States Dividend Equity Fund offers a forward yield just under 4%. The data provider Stock Analysis places that exact figure at 3.88%. With a $10,000 stake, a 3.88% yield projects roughly $388 over the next 12 months. Rounded for simplicity, think $400 per year, divided into 4 quarterly installments of about $100 each. In monthly terms, that is $33. For comparison, $50,000 yields about $1,940 annually, enough to cover a modest weekend getaway. $100,000 yields roughly $3,880, or more than $300 every month, often equal to a utility bill or a week of groceries. These payments arrive like clockwork at the end of each calendar quarter. They flow whether the stock market is giddy or gloomy because the fund's underlying companies distribute their own profits on strict schedules. 2. The machinery behind the money. Understanding the fund. The Schwab United States Dividend Equity Exchange Traded Fund tracks the Dow Jones United States Dividend 100 Index. The index screens for companies that have at least 10 consecutive years of dividend growth, healthy cash flow metrics, and sensible debt levels. The result is a portfolio of a little over 100 names. 103 as of the final trading day of June this year. The fund's internal expenses are famously lean, 0.06% per year. That means $6 for every $10,000 invested, less than the cost of a large sandwich. Every dollar not spent on fees remains inside the fund, compounding on your behalf. 3. Meeting the flagship holdings. Let us walk through the top 10 constituents, each accounting for roughly 4% of assets. Texas Instruments manufactures analog semiconductors found in everything from medical devices to industrial robots. Its wide customer base keeps revenue steady even when one sector slows. Cisco Systems equips corporations and governments with networking hardware and cybersecurity software. Recurring service contracts translate into durable cash generation. ConocoPhillips explores, produces, and refines energy. Rising world demand for oil and natural gas supports its dividend, while disciplined capital spending tempers risk. Chevron mirrors ConocoPhillips but layers on a century-long operational history and integrated downstream refineries. Merck delivers patented medicines that address chronic and acute illnesses. Regulatory hurdles create high barriers to entry, preserving pricing power. AbbVie maintains blockbuster drugs today and an advancing research pipeline for tomorrow's needs, especially relevant as the global population ages. Altria Group owns tobacco brands whose loyal customers provide consistent, albeit controversial, cash flow that management returns to shareholders. The Home Depot supplies professional contractors and weekend renovators alike, benefiting from steady household maintenance spending. Verizon Communications supplies wireless service to more than 100 million subscribers, making its dividend feel as dependable as the monthly phone bill. The Coca-Cola Company sells beverages almost everywhere humans gather: stadiums, schools, airplanes, and dinner tables, creating a revenue stream as reliable as sunrise. Each holding obeys a common principle: robust free cash flow and a cultural commitment to share that cash with owners. 4. Reading the sector quilt. As of the most recent reconstitution, the fund allocates about 20% to consumer staples, 18% to healthcare, 15% to energy, 12% to industrials, and 10% to information technology, with smaller slices in financials and consumer discretionary businesses. Earlier in 2025, Schwab's Index Committee increased energy exposure to more than 21%, nearly double the prior level, after energy companies met the yield and growth criteria. The shift boosts current income but introduces greater sensitivity to commodity swings, an intelligent reminder that no investment is perfectly tranquil. 5. Why a market dip is your dividend gift. When share prices fall while corporate cash payments stay constant, yield rises automatically. Purchasing during a slump therefore locks in a higher starting income rate. Add the psychological benefit. Buying when headlines scream fear trains you to think like an owner, not a trader. The companies inside this fund have continued paying, and often lifting, their dividends through recessions, oil price crashes, and health crises. Previous drawdowns rewarded patient buyers handsomely in later years. 6. The power of reinvestment and compounding. Picture a snowball at the summit of a gentle hill. You nudge it. Gravity does the rest. Dividends work the same way when you enroll in an automatic dividend reinvestment plan. Each quarterly payment purchases new shares, which then earn their own dividends in the next round. Over a 20-year retirement horizon, this silent compounding can double or triple original income without additional out-of-pocket contributions. 7. Stress testing suitability for retirees. Retirees often balance two non-negotiable needs: preserving capital and receiving spendable cash. The fund addresses the first through diversification and the second through its explicit dividend mandate. Furthermore, by insisting on 10 full years of dividend increases, the index effectively screens out companies that cannot weather storms. That quality filter matters when every dollar is earmarked for daily living. Low annual fees, quarterly liquidity, and complete daily transparency add further peace of mind. You can see every holding and every sector weight on Schwab's website before breakfast, then make changes with a single click if personal circumstances shift. 8. Risks you must respect. No income strategy is invincible. The enlarged energy weighting means that a prolonged collapse in oil prices could dent both share value and payout growth. A sweeping change to dividend taxation law could also reduce after-tax income. Finally, concentration in United States domiciled companies leaves the portfolio less exposed to emerging markets, where long-term growth may be faster. These are not reasons to avoid the fund. They are simply realities to incorporate into broader planning. 9. How to plant your own dividend garden. Open a brokerage account with low trading commissions and free dividend reinvestment options. Place a limit order instead of a market order if you prefer to control the purchase price, especially on volatile days. Activate the dividend reinvestment plan so every quarterly check buys fresh shares automatically. Schedule a semi-annual review. Confirm that sector allocations, total position size, and personal cash needs still align with your retirement budget. Track progress in plain English. Rather than drowning in statistics, write a one-page summary every 6 months. Current shares, X. Annual cash, Y. Planned withdrawals, Z. This habit keeps goals vivid and mistakes visible. Finally, vision of a cash flow funded life. Return to the porch we pictured in the opening scene. The garden has flourished. Hummingbirds dart among blossoms, each bird a quarterly payment, small on its own yet persistent and uplifting. You are free to plan a cruise, visit grandchildren, fund a cherished charity, or simply savor an extra measure of peace. The Schwab United States Dividend Equity Fund will not make headlines with overnight riches, but it can grant something rarer: the confidence to live today knowing tomorrow's bills are already paid. Take one deliberate action before this video ends. Perhaps you allocate that first $1,000. Perhaps you schedule your brokerage review, or perhaps you share this masterclass with a loved one who needs it. Momentum favors the bold, and time rewards the patient. Thank you for investing your attention so generously. Remember, education is the seed. Decision and discipline are the soil and sunlight. Tend them well, and let your dividend garden grow. Please subscribe to my channel for more videos like this. If you have received value from this video, please smash the thumbs up button to give us a like. Please leave us a comment in the comments section below the video. Until next time, please be safe and may God bless your efforts.